And I'm going to bring in JD Durkin, CBS contributor and host, right, of Public.com. Good morning, JD.
Good morning. Look at this crowd. They're all here for you in the show, I'm sure. Everyone's
it's all only perfect. No.
That's what it is.
They are here for UL Solutions, tuning into NYC TV Live. What a good morning it is. So actually, the markets are now open right now. I mean, what do we got? Can you give us a little update before we get into our conversation?
Well, a little bit of selling here today. I mean, obviously, it really kicks off the start of earnings season. We always followed the big banks, so we got names like BlackRock, JP Morgan, Chase, Citi, Wells Fargo kicking things off. And even though historically a lot of these names, of course, do beat expectations, like we see from JP Morgan Chase, a little bit of surprise selling here on this Friday. We've been kind of in this whipsaw territory the last few days, right? A really hot CPI print on Wednesday, some selling, not as hot for wholesale PPI inflation data yesterday, a bit of green on the board. Could be a bit of a back and forth session for today's Friday.
Yeah, let's go back to the CPI data, right? It rose by 3.5%. I mean, would you say that surprised investors, or how did they react?
I mean, it certainly seemed like a lot of surprise. Listen, if you're an institutional investor, you bought into this narrative that inflation is on its way trending down, and your base case is that the central bank is going to be cutting rates sooner rather than later, then maybe you get a little bit of surprise here. But let's not forget, it's not just CPI. We also look at PPI, which then was kind of a different story just 24 hours later. And Trina, you and I talk all the time about the importance of PCE. That comes out 2 weeks from today on the 26th, the Fed's preferred gauge of inflation. If you take the Fed at its word that core PCE is most important to follow, that's still at 2.8%. That's closest to the Fed's target. So I think these numbers are important. Bit of wait and see for the 26th for what the Commerce Department has to say.
It's still early in the year, but investors, everyone really was anticipating for the Fed to drop rates at least 3 times in 2024. But, it doesn't seem like it's looking like that right now.
It doesn't. And Chairman Powell has been very clear in his public comments into members of Congress. He says, look, if the current conditions hold, yes, we can reasonably expect within good faith we will lower rates at some point. But we keep now kind of punting that further and further down the line. There was talk of a spring cut, then it went to June, then it went to July. Now you're talking September, but we can't forget, the Fed historically, it wants to maintain its perception of independence. It does not want to start meddling with monetary policy too close to the November election. We don't have a whole lot of meetings left for the Fed to take decisive action. Once we get to September, they'll probably put a cool on monetary policy changes, let the election play itself out. But as these hotter than expected inflation numbers continue, that makes the case much harder for the Fed to say we're in a confident position in order to now effectively lower rates.
All right. Well, thank you so much, JD. It's always great having you on the show.
Happy Friday.
Yeah, happy Friday.